Good afternoon, everyone. My name is Kate Mendenhall. I'm the Executive Director of the Organic Farmers Association. We're a national organization aimed at supporting a strong national voice for certified organic farmers. Today, we're sharing information about the Employee Retention Credit, aimed to help businesses of all sizes regain economic losses suffered during the pandemic. OFA sponsor Bottom Line Concepts is a performance-based financial consulting firm specialized in helping businesses of all sizes and in all industries maximize the employee retention credit. Our presenter today is Jason Ben Bassett, the head of corporate partnerships at Bottom Line Concepts. Jason will be explaining what the credit is, how to determine if your business qualifies, and how it may help your business in today's webinar. Organic Farmers Association offers this webinar as an educational introduction to ERC and does not endorse Bottom Line Concepts over other consultancy firms. OFA encourages businesses to consult their tax professionals to make sure ERC will work for their past and current filings. You can always learn more information at IRS.gov, where you can read about eligibility requirements and more about the employee retention credit. If you have any questions during the webinar, please use the Q&A feature at the bottom of your screen, and we'll address those questions at the end of the presentation. Thank you. Go ahead, Jason.
Well, it's very nice to meet everybody. Nice. I'm sorry. Do you want me to go on video? I'm sorry, it won't work. But so my name is Jason Bassett, and thank you for coming on this webinar to discuss the employee retention credit. A little background on our company. We were created in 2009 as a cost savings government grant company. We are performance-based and have been since day one, meaning we only get paid when companies get paid, okay? And what happened was we worked mostly with Fortune 1000 sports teams type companies and larger companies that had big utility bills, sales tax audits, AP audits. And in 2021, Joe Biden updated the CARES Act and basically said companies can have both the PPP and the employee retention credit. And at that point, we created a separate division where we only help companies with less than 500 employees is what the sweet spot of this program is. So a little bit about the ERC, it's a program designed to help businesses that were able to retain their employees after COVID. The employee retention credit is based on your W-2 employees. Unfortunately, 1099s do not qualify because there's no payroll taxes paid on it. Most people have heard about that you can get up to $26,000 per employee. And in my opinion, a lot has to happen for that to occur, okay? One of the benefits of working with Bottom Line is we take this very seriously in really understanding a business, the states they're in, the changes they made to see where they really qualify until. The only times that we really see businesses qualify for $26,000 per employee is when they have a sales decline. So when this CARES Act updated that you can have both the PPP and the employee retention credit, it also got said that there's now two ways to qualify for this grant. The first way that companies qualify is a decline in revenue, but it's big numbers. It's 50% 2020 versus 2019, and 20% comparable quarters 21 versus 19. So January, February, March of 21 versus January, February, March of 19. But the IRS.gov says that there's two ways to qualify, and that's an or question. And how most businesses are qualifying for this grant is a change of operations. What the IRS says is a full or partial suspension of one's business or trade due to government order limiting commerce, travel, group meetings, right? So what does that mean? If you look at how you operated your business in 2019, the changes, the pivots that had to be made after COVID to continue the success. And on this page right here are examples of changes that occur. And what I've learned is that most businesses that had a change had more than one, right? So on here, you see change in business hours, shutdowns of supply chain or vendors, reduction in workforce or employee workloads, inability to visit client sites, change in job roles functions, because people were helping in other departments just to help move things along because of everything that was restricted. And another big thing that comes up is, from a sales marketing point of view, is trade shows and events, right? That's travel. And if you think about it, at some point, a lot of the in-person events went to virtual. And then even when they did reopen, it was limited to 25%, 50% before we got back to normal. And during those times, businesses found pivots and other ways to continue driving revenue in order to keep their employees employed. And it's called the employee retention credit. So a few qualifier examples in your industry might be, loss of farmers markets, right? So when the markets were gone, you found other ways to do things. Maybe you worked with institutional buyers, restaurants, colleges, schools. They were closed. If you did not have a revenue decline, what pivots did you make in order to continue your sales success? Alejandro, can you go to the next slide? So with all that being said, there is a process that is done in order to see when companies qualify, right? And all it is a 10-minute, 15-minute conversation at first to understand the business, understand the pivots. And a lot of this is based on experience, because at this point, we have helped over 20,000 companies go through the process and get this grant. Before I go into the process here, one thing that I did not mention that is very important is, one thing that we were very strict about in the beginning is that we were going to do everything in-house. So any person that you work with at bottom line is an employee of the company. There is no outsourcing. Our accountants are in-house, our tax attorneys are in-house, our advisors are in-house. We do not outsource anything. So the process, the first part is the kickoff, where we book a call with an advisor just to understand the business. No two businesses are alike when it comes to this product. It's business specific, not industry specific. And we make a determination together if we believe that you qualify for this grant. And assuming you say yes and want to go through the process, we are going to engage through an agreement. And the kickoff is we send a welcome email that has 5 files in it. It has a simple questionnaire, less than 10 minutes, that asks for general information such as number of employees in 19, 20, and 21, who their payroll provider is, some of the changes that occurred, and how many PPPs. It's also going to ask you to fill out an eligibility questionnaire. Yes, we had the conversation, but here we get a little deeper. This also helps us understand where you qualify until. And then we're going to ask you for some information such as your 941s, payroll journals in a certain format, and your PPP payroll forgiveness information. And to circle back to that original questionnaire, when we collect data, if you tell us you have 50 employees and then only send an Excel sheet with 20, we're going to stop and ask questions versus assuming that the Excel sheet is correct. Once we have all this data from you, now all of it comes together and is sent over to our accounting team. And there we're going to analyze your information to determine states operated and where the executive orders run until. And during this time, we're going to review all the information that was filled out from your gross receipts to see if you qualify on a revenue decline or if we have to follow the partial suspension. Once we're done with this review and go through all the numbers, within 3 weeks, you will have the amount of the grant to the penny. And once you have that grant, what's going to happen is, to the penny, we're going to send you 941Xs. We do this in-house. And once you review the 941X and sign off on it, it is sent to the IRS. And then 4 to 6 months later, you'll get letters in the mail saying you made overpayments in specific quarters and that you should be expecting a check. And you'll get one check per amended period. The maximum amount of quarters is 6. I would say most people see somewhere between 3 and 4. And that's everything that's involved. So working with Bottom Line, okay, we have a 14-year track record in the business. We have over 20,000 clients. We've recovered over $3.5 billion. We've worked with lots of accounting firms. A lot of accountants work with us because this is not as simple as just filling out a piece of paper. There's more involved in that. And they just aren't built to do that work and they want to pass it to us. And we also work with a lot of law firms. We've helped a lot of law firms get the employee retention credit, and we help law firms, with their clients get the employee retention credit. So this is main reasons to work with us. We will be here after this program ends. Here's another slide where we just talk about qualifying, analyzing, and guiding you through the process. The great part about us is there's always someone to speak to. You will never call a phone number where might not be able to talk that second, but we will get back to you. We have enough quality control in place. Our CEO is always available, and no one wants to be on an email that, hey, Jason didn't call me back, because he's very accessible. And if something's not going right, it's okay to reach out to him. We don't run this in a corporate structure where you have to go through ladders. We keep it very simple and we're always available. Who has questions? Anybody have any questions?
Jason, I'll ask a question. What is a good indication that you might not be eligible?
What is it? That's a great question. And I got to think about that for a second. So if someone who might not think they're eligible is someone who believes that their revenue is up, they made more money, they believe they're not eligible. In my opinion, people that are not eligible are people who just say, we made no changes. COVID didn't happen. We just showed up to work. We just kept going. Nobody did anything different. It's hard to believe, but there are people out there that believe nothing changed. And what I like to say is, all I can do is give information. I can't sign any paperwork for anybody, so I can't make the final decision. It's really just a matter of having a conversation. I like to call them a brainstorm. So someone asked, it would take 4 to 6 months. Why so long? So our process is 3 weeks. I tell people 4 to 6 months. It's the IRS that is sending you the checks, right? So that's their process. If checks are under a certain amount of money, and I like to use about 225,000 as the number, they're getting checks in 3 to 5 months. But as long as we're going down this road, something that I did not bring up, and I apologize, is what we're seeing clients get back per employee. And let's use $700 per week, or $37,000 a year as the as a number. So if they took 2 PPP loans and an employee makes $700 a week, you should figure, depending on the state you're in, you will get $8,000 to $10,000 per employee. If you took one PPP, on average, you'll get 12 to 14,000 per employee, and no PPPs, you will get 17 to 19,000. In regards to how long you have to apply, for 2020, you have until April 15th, 2024. And for 21, you have until April 15th, 2025. But what I will say to that is, we never know if the government's going to sunset the program. So what I tell people is, if they're interested in getting started, it's something they should think about, because you never know if they're going to end the program. How to enlist our services? We can send you a link that you just fill out. It books an appointment with an advisor, and we have a call. So in regards to temporary or seasonal employees, any employees on the W-2 forms, any employees that are paid W-2 during the time frames that you qualify will be used for calculations, whether it be part-time at 1 hour or full-time at 40+ hours a week. As long as you're in a period you qualify, that data will be used. In regards to farms in different states, so the simple way of doing this is you look at the main state. But yes, if you have different employees in different states, we would walk through each one, even if they're on the same EIN. And we would look at it at the executive orders and determine which states to use for which employees or which EINs, if you have separate EINs, to determine the qualification. So if you have 3 EINs, go to the next page. If you have 3 EINs in 3 different states, each state would be looked at, each EIN would be looked at differently, because you would have different executive orders. And I apologize, in order to list our services, it's www.organicerc.com, right? And all you do is fill that out. You'll book an appointment with an advisor, and all it is a 10 to 15-minute phone call. It can be as short as you want it, as long as you want it. You know, again, I always like to say we're having a brainstorm about your specific business's situation. Yeah, Kara, sorry about that. I moved the PowerPoint over to the next slide. Does anybody else have any questions? I thought those were all great questions, and whomever asked them, I would say yes. What if I have a wholesale farm? Again, in not understanding the situation, of course, it's worth a conversation. When you have a wholesale farm, you know, do you attend trade shows to market yourself? Did you have clients that were coming to the farm to pick up food? What's involved while they're there, right? We would have this conversation to understand what's in your specific scenario to make a decision or determination of whether or not we believe you qualify.
Thank you, Jason, so much for introducing the ERC program and answering our questions today. This webinar, I think, will be available for folks who want to watch it again. And of course, the last slide here gives you instructions on how to learn more from Jason at Bottom Line Concepts. Thank you so much.
Great. Anybody has any additional questions, you can always reach out to us, and we'd love to help you. Have a great day.